Louise Bedford here, your host of the Talking Trading podcast. This is how traders excel. Now, today I have a very special guest who I will introduce in just a moment, but I wanted to talk to you about the importance of identity as a trader. Now, for those of you that know me very, very well, and that would be just a handful of people who know this story, a lot of you won't realize, but I am actually car royalty. That's right, automobiles, my friend. I am related to Noel Bedford, and Noel Bedford was the person who named the Monaro car. Now, Monaros have an amazing cult-like status and following, especially in Australia. And Noel was so famous that he actually ended up on a recent episode of Mastermind. We're going to cut to that now. If you're watching on YouTube, you can see the video of this. If you're listening to the audio, have a listen what they said about my father-in-law, Noel Bedford.
The name Monaro was chosen after Holden design team member Noel Bedford noticed the word on a sign while driving through which New South Wales town?
Obviously needed Monaro, obviously.
No, it's actually Cooma he was driving through. 1968 Monaro.
Now, Noel has just had an amazing career working for GMH for so many years as a designer, working on the Monaro and many other Holdens. But one of the things I used to love doing is going around to car meets with Noel. Now, the Monaros would all be there, beautiful cars, all different colours. And Noel used to go around with his Sharpie pen and sign on the inside of car doors, the inside of bonnets, sometimes people's driving gloves, and instantly those items would go up in price. So Noel was very much in demand, and one of my favourite memories with Noel was a lass with a rather ample chestage area, shall we say, saying, "Oh, could you please sign for me, Noel?" And Noel said, "Of course." And then she literally pulled down her top and Noel signed across that particular region of this young lady. It was hilarious. And let me tell you, Noel now unfortunately has Alzheimer's, so he doesn't remember a lot of his past. However, he does have that as a memory. Goes to show some things definitely stick, don't they? Now, in terms of identity, what does this mean for traders? Often when people are trading the markets, they don't have a role model, they don't have somebody to follow, and it can be quite confusing. In our professions, usually we have somebody just ahead of us who we can follow and emulate. And Noel definitely had those accolades because he became famous in that particular arena. It is a very unlikely scenario that you will become famous as a trader, and that can make it difficult. So my guest today is Robert van Eyden. I'm going to tell you a little bit more about Robert soon, but Robert, could you give me an idea? Do you feel identity is important to traders?
Louise, absolutely. There are various labels or identities people give to traders. For example, gambler is one that comes to mind. Guru is one that comes to mind. Then there's also identity, which is linked to successful or unsuccessful, but that's more labels. So in terms of, how do you identify a successful trader? It's quite a challenging question because there's not a specific label.
It is interesting, isn't it? I do think of you as my favourite badass trader. I'm not being rude here. I'm actually quoting from the name of your book. So let's tell the audience a little bit more about you. Your background is many and varied. You're currently the CEO of IG Markets South Africa and the author of several books, Investing Happiness, The Money Fountain, and your new book, The Badass Trader, How to Trade Your Way to Riches. Just love that title. Robert, you were fascinated by the workings of the financial markets from a very early age, and you became a specialist in managing behavioural biases and investments. You've got 3 decades of working as running stock brokerage firms, but also I can see that you've got economics in your background, which is fascinating, and you do approach the markets with a very unique perspective. So, Robert, what do you think a badass trader actually is?
Louise, it's such a good question, because when I initially wrote the book, the title of the book was Unbeatable Trader. And the question I wanted to get answered in the book is that trading is the hardest, easiest thing. And I think a lot of people get lured to the market because it seems to be very easy. Barriers of entry are very low. And with the event of platforms, 24-hour trading, it's become very easy. Unfortunately, it is the hardest thing because it requires a lot of uncommon thinking. And while I submitted the book to the editors, they actually felt the original title, called Unbeatable Trader, did not capture the essence of the book, and they suggested the label Badass Trader, which initially caught me by surprise. And then I started unpacking this word. And then I found that a badass is a way of life. It represents a person who faces challenges with unwavering determination and grit. And there are a couple of aspects of being a badass in life. They are fearless, not in the way that they take excessive risk. They are fearless, but if we look at trading, they would take every trade because they know that's what they should do. The second thing is they've got discipline and if I go back to trading, they've got discipline to follow their trading plan through thick and thin. The third thing of a badass trader, which is also quite interesting, is that they can manage risk quite well, and that's quite important. So even in other, where we can attach the label to other endeavors, they do manage exceptionally well. And then the last thing, which I've mentioned as well, if it's grit or resilience, they just carry on. And we know the game of trading, you'll probably have more losses. You'll have a sequence of losses or series of losses. You just have to carry on and be a badass about it.
It's so true. I think this is one area that definitely tests people's resilience. One of the things I can hear in your answer on LinkedIn, one of the things I follow all the time is your principles of trading. I love those. They are snapshots about what it takes to be a successful trader. What are some of the principles of trading that you think traders miss?
If I can revert to one of the chapters in the book, the first chapter in the book is the 4 undeniable truths of trading. And I'll just briefly go through them because a lot of people that enter trading do not grasp this. The first thing is that when placing a trade, it's placing with probability. You're never sure of the outcome. So in other words, you need to manage probabilities quite well, and you need to understand that every trade placed has a value. It's either 50-50, which a lot of people don't understand. They think it's a given, it's a certainty, and share prices or stock prices just rise over time. So that's the first undeniable truth. The second undeniable truth is that you do need capital, and you need to protect your capital, which is quite important, because if you can't protect your capital, you will incur a lot of losses, and things won't go your way. Which brings me to the third principle, or the third uncommon truth, which means that there will be a lot more losses than you actually think there will be, which is not, if you look at the people that sell the courses and the education, this is not what they focus on. They focus on the win rate. And we've also been taught, 80% is a lot better than 90%. And I'm sure, Louise, when people ask you, how's your trading, that's probably the second question they ask you, how's your win rate? Actually, win rate's it's an important component, but it's not the ultimate component, because you could have a high win rate and get into the market once in every couple of years, And it doesn't mean that high win rate means high profit either. Which brings me to the last undeniable truth of what's in the book, which is actually what a badass trader does very well. They've got some sort of edge, and they let the edge play over time in a disciplined way. They understand it's not about that the previous trade does not impact the next trade. And to measure the success of an edge, it's about a series of trades. You've interviewed a lot of people, and the common understanding, it's not about one trade, it's about 100 trades. It could be about 1,000 trades. So that's my answer in a long way to your question.
I love that. There are a lot of people who, when they start trading, are more vulnerable because they don't have that track record. They don't feel that they have been able to achieve yet. And I like the saying, scared money never wins. I'd love to hear your thoughts about fear. I know that we have spoken about fear in terms of it makes you dumb. It makes you not see what is in front of your very eyes. But I'm sure you've got some other thoughts about fear. What can traders do if they are experiencing fear in the markets?
So I think yeah, fear is quite an interesting concept to unpack, because if I just recall the other two books I wrote, which is not trading books, more investing books, which is basically buy an ETF and buy and hold. And a lot of people are fearful to do this, because the big thing in the market, which I mentioned as well, it's probabilities. You're not guaranteed if you place a trade or investment that will go up. Sometimes in investments, if you, in a great financial crisis, if you invested, it took roughly about 3 years just to break even. So people are scared. So people are scared to invest. People are scared to trade. And the big reason is money is emotion. Money is very emotional. So in terms of trading, you do need to risk it to make it, or risk the biscuit to make it. So how do you manage fear? If you are fearful, and you should always be fearful in the market, the best way to approach fear is through risk management. So you should be able to trade as much as you can fear. In most cases, it's about 2% per position. And then if you look at the pyramid of risk management as well, it is, you would have position size risk, so 2%, which is decent. Then you would look at a number of positions as well. So I think you call it portfolio heat. You mentioned it in one of your podcasts. So 5 seems to be the optimal number. And then the optimal number in terms of total position size per trade. So which seems to be 25% of your capital if you look at the works of Kelly and Rolf.
Yeah.
Yeah.
Oh, you're
So
speaking
that's it.
my
So
language. Now, I just want to unpack some of what you've said here, okay? Because
yeah,
there will be some people that aren't quite familiar with all of these terms.
yeah,
And definitely fill in the blanks for me here, Robert. You're talking
sure.
about probabilities because there is no
Yeah,
certainty with trading. And without
no,
that certainty, of course, that makes us feel a bit uncomfortable as humans, which is where the fear
yeah,
comes in.
yeah,
Portfolio heat. Now, that is a term when we're looking at where are our risk factors? The biggest risk is when we first place money in the market before our initial stop is hit. Now, that
yeah,
5%, imagine we've got a 1% risk, so we're prepared to lose 1% per trade. We can open 5 positions at that initial stop level, which would mean a 5% heat. So just to go with that. And then the other aspect is the Kelly principle. Now, the Kelly principle is where we don't want too much of our money in any one position, especially for equities. However, I know, Robert, that you're the managing director of IG. So what you can do with the CFD market is disregard the Kelly principle if you have a guaranteed stop loss order, a GSLO, on your trade, because that GSLO is your risk protection. That is very unlikely that an equity or a CFD in this case will go from a particular price down to zero. in regardless of terms, regardless in the markets, it doesn't usually happen. However, we need to protect ourselves from risk. So we do that with portfolio heat, with Kelly principle if it's an equity, or a GSLO in terms of trading with IG markets. So hopefully I haven't fouled you up with any of that, Robert. Is there any gap there you'd like to fill in?
No, I absolutely not. I think so to manage the fears, to manage it through good risk management, and to trust your risk management as well. So I think, yeah, a fear will always be there, given that we are working with an unknown outcome, and we as humans are not wired for the unknown. We always want to know, we're always curious and things like that. But I think over time, the lessons learned from let's call it the badass traders out there is that they spend a lot more time on risk management and ensuring and fine-tuning their risk management and looking at the three components you mentioned as well.
I came across a study the other day. It's an older study, and I'd love your thoughts about it. Fear is one aspect, but of course, hope or greed is the other. This study looked at hope, and I don't know if you're familiar with it. It was done in the 1950s, and back then some of the ethics were a little dubious, shall we say. So I doubt that they'd repeat this experiment now. It was done by Kurt Richter, but I like that because he's got rich in his name, so that's always nice. So what he did is he took some rats, he put them into buckets where they swam around each bucket until they died, and he timed how long it took for that rat to die, and it was 15 minutes. So a little rat in a bucket of water has 15 minutes before it decides to drown. Then he took another rat, put it in a bucket of water, but then after the 10-minute mark, he took it out, he dried it with a little rat-sized towel, he made sure it was happy, gave a little tickle on the belly, and then put it back into the bucket. Now, this rat must have been terribly disappointed to be back from whence it came, but the thing that is the most applicable to traders is that this rat actually lasted 60 hours. 60 hours of swimming around and around in that bucket of water before it died, because it had in the back of its mind, if I just keep going, somebody will rescue me. Now, that is the role of hope. And I do think for traders, the lesson is we need to hang around the arena. That's one of the things that I'm very serious about on Talking Trading, but also you are serious about in your books and in your principles of trading on LinkedIn, to provide hope for people so that they can hang around in the arena long enough so that they can become successful. And there's study after study in the trading arena that says the longer you have in the market, the higher the chance of trading success. I'd love your thoughts on that, Robert.
So hope is an interesting question. So I do think so. The opposite of fear in trading can be too hopeful, that we and it's usually driven by what is well known as the gambler's fallacy. So because in a bull market, it's a rising tide, everyone does exceptionally well. So there is a hope and expectation when markets go up, and we saw it, we've seen it with different markets over the years, for example, with the crypto market as well. I think the challenge with most people, we are wired, when it goes well, it can only get better. And when it goes bad, it only can get worse. So these are the challenges we deal with. In terms of a trader, so let's call it false hope. With false hope usually occurs when, especially with new traders, when they've had 3 winning trades in a row, and they view themselves as a guru or a badass trader, and then they start ignoring all of the good principles of risk management because there's a lot of hope that the next trade will be positive, and then they violate and they usually blow up. So there are biases that actually can drive hope as well. And then the other interesting thing with hope as well is, which also indirectly impacts it, is the fear of missing out. Because suddenly, and we saw it with the Bitcoin move as well, it's been going up. There's a lot of good news. I am also hopeful if I put in my my $1,000 that'll go up to $10,000. Fingers crossed. And I was even caught out. I did not invest in Bitcoin, and when it was about 65,000, I thought, yeah, it did go up to 80, and when it was at 80,000, people were saying it will go up to 100,000. And I'm sad to say I was caught out with this hope as well. So I think hope does play quite a lot, and we should be hopeful. But from a trader, ignoring the biases where a trader should always place their hope on, if they're trading, if they've got a system with a trading edge, in other words, there's some advantage they've got, but they also know that this edge plays over time, because there will be periods where you've got consecutive losses. There will be periods, for example, when you're not trading. I always advise people to take leave. So you need time to let the edge play out. And that is where you base your hope on. You can't base your hope on your emotions. You can't base your hope on the market. You can't base your hope on any herd episode that is happening in the market. You need to follow your own edge, and execute your edge. And that was, again, one of the characteristics of a badass trader. They are very disciplined about it, and they're very focused about that, and they know their edge will play out over time, and they just kind of ignore all the emotion around it.
That's actually interesting as well, because in your conversation there, you were referring to the market as if it was a person. And I think what happens with a lot of traders, it's almost like we anthropomorphize the market, and we think of the market as an adversary, as an enemy. Tell me your thoughts about what that can do to traders, and what would other types of more suitable metaphor be to help traders trade with that edge?
Yeah, I think the market was actually, the label actually came in the last couple of years with Warren Buffett and his mentor, when he started talking about Mr. Market. Prior to that, it was just the market. Now it's Mr. Market. And I think it's wrong to adequate the market to a persona. I think what is quite important about the market, it is like any business opportunity, it provides opportunity. And I'll refer to one of your LinkedIn postings as well. In terms of the opportunity, it could be viewed with scarcity or as opportune. And I think the exciting thing with the markets in the last couple of years is the amount of opportunity it provides from, different markets, different instruments, different time zones, trading from home, trading from wherever you want to. This was not around a couple of years ago. So I view the market as a business opportunity where there's no scarcity and a lot of opportunity.
That can foul people up too, though, because I've noticed that some of my best traders restrict their markets, they restrict their universe so that they don't have that, I could trade anything at any time, and then they spread themselves so thin. Have you seen traders have that in today's market, where because there are so many opportunities, they don't develop their own sweet spot?
Agreed. There are two things at play. So the one thing would be, it is this dopamine effect that we need to trade every market and every instrument. And I think new traders, and specifically people that aren't successful at trading, hop around in terms of markets. They would start, where's the biggest opportunity? What are the hottest markets? And rightly or wrongly, most of them start at Forex, and that's where it goes wrong. So I do believe you need to, for example, myself, I trade CFDs and stocks, and indices. And had a bad episode with crypto, which isn't more of it. I didn't trade it, but I invested. But I don't look at Forex or options. I specifically trade at stocks. I think one of the biggest traps, there's a thing called the home bias as well. So, for example, you could end up just focusing on your own stocks instead of the whole world. And I think that's just on the flip side of build your specialization, but a CFD is a CFD if you trade it on Australia or in the US or in the UK. You need to be, again, to your previous question, there are so many opportunities, but I would highly recommend that people stick to one instrument type, preferably one time frame type as well. And then once they've mastered it in their home market, expand. There's a huge world out there. And what we've also realized in certain markets, there are CFDs available that do not represent in other markets. So, you might be, for example, AI is extremely relevant at the moment, and in a lot of countries, apart from the US, you can't have actually access to AI stocks.
I think what happens is that people think from an identity perspective, to be a trader, I have to trade everything over every time frame.
Yeah.
When in actual fact, the full-time traders that we know, Robert, they're not trading everything. They've got their blinkers on. They're focusing on a specific universe. That is one of their success habits, to work out what works for them and to focus on that. Actually, I've been looking at quite a few traders' trading plans lately that are experienced traders, Robert, and what I've seen is if we can break down their equity curves across archetypes, which is the type of trade that they're entering, like a breakout, a retracement, or a reset, they're my 3 archetypes. And if we can break down the equity curve according to their time frame, so whether it's a 4-hourly chart, a daily chart, or a weekly chart, sometimes there is something causing friction. There will be, say, somebody who's intent on trading for hourly, it's just that they can't trade that sucker. They end up losing money in that particular part of their portfolio. And if we can get those people to put that market aside or that time frame aside, that stops the drag on their overall portfolio. Have you seen that as well, Robert, where some people, they don't quite realize that what they are trading is not their sweet spot?
Agreed. I've seen it quite a lot. And, over the years of managing various stockbroking related businesses, I think 2 things that have struck me, and also mentoring people in these organizations as well, is the lack of stop losses, and then this idea that you need to chase every market out there. I always get reminded if there's an old Indian saying that says if an eagle chases 2 rabbits at the same time, it will not get one. And you can relate it, in terms of lions with gazelle, etc. And that's a thing as well. One of the things when I started unpacking the word badass, I actually discovered most badass people are very specialized. They became badass because of their specialization and nothing else. And they became maestros at it.
I like that. It's definitely what Erickson was talking about from a psychological perspective when he looked at people specializing in any particular area. I know Malcolm Gladwell eventually took Erickson's ideas and it became the 10,000 hour rule. I disagree with that 10,000 hour rule unless it's dedicated practice, which is what Erickson was talking about, to really focus on something, but to the exclusion of all else. Get rid of all of your distractions. Don't even have your phone in the same area. Make sure you don't have people coming in and disturbing you while you're learning about that market. I know that is a tough habit for a lot of traders to break. What would be some of the other tough habits that traders need to break in order to be successful?
I agree with you. I think we're in an age of distraction. So one of the things, it's not alone distraction about markets, it's social media, etc. So limiting the amount of distraction. But the biggest challenge, and it's a good thing and a bad thing, there's so much information out there, and then people are forever the learner trader, because they feel, there's always a piece of gold, a gold nugget out there that is better than what they've got. So I think my advice would be learn the basics, understand it is a very hard endeavor. It will become very easy if you apply a couple of things. Be careful of distractions, be careful of the trinkets out there in terms of, and there are many, it's time frames, it's markets, it's material. And then, the big thing always, like you said, it's intentional practice. And I agree with you. I think Erik Erikson, actually, that was his intention, the 10,000 hours, but you need intentional practice because, Louise, I can tell you, I've tried golf and I've probably got 10,000 hours, but it's never been intentional. And therefore, I'm a happy hacker.
I love that. A golf and trading seem to be so similar. It is so irritating. I have a tiny golf story, Robert. My husband, when I first met him, I don't play golf, okay, and I've never even attended anything to do with golf. He decided that golf should be the thing that I get good at, and he took me to a pitch and putt, which is a slightly larger mini golf, slightly. So anyway, there we are, and I'm pretty bad at it. And he got this hole-in-one, bang, a hole-in-one, and it was a quarter golf course size. So it was a significant achievement. And I just went, well, of course you got a hole-in-one. How hard can it be? You've been doing this for years. I would have expected you to get one every time. And he's just like, not very happy with me with that one. But who knew? I mean, who knew?
Yeah.
Not me. I'd love to hear more about your book, Robert. What inspired you to write this new book?
It's a combination of things. I initially started writing these principles on LinkedIn totally by accident about 4 years ago. So they've been going on, and over time as well, they're getting a lot better. I'm quite embarrassed if I look back at those initial ones. And then, so that was the one part. So the one part was basically, I got a lot of requests from people to say, is there not a consolidated view of all of these principles? And my standard answer was, it's on my LinkedIn profile. You can just look at my activity, which wasn't a palatable answer for most people. Then about 2 years ago, I started writing articles for technical analysis of stocks and commodities. It was during the COVID period, and I thought, I've been writing these principles, why not expand? And I wrote 3 articles for them, which basically is the framework for at least 3 chapters of the book. And then through LinkedIn, which is such a powerful platform, a publisher out of the UK actually contacted me and said, would I consider potentially writing a book? And I didn't actually think about it because, Louise, you've written 5 best-selling books. It's a huge mission. It takes a lot of work. And alas, you need a lot of resilience because you're dealing with editors and copywriters who continuously correct you all the time. And it's a blow for the ego at best of times. So long story short, I actually submitted to this publishing firm in the UK, and they rejected me.
How dare they?
How dare they? How dare they? And I was quite taken aback, but the seed was planted, and I thought, I've done all of this effort, and then I submitted to other couple of publishers, I think in about a 3-week time frame. And then secretly, I was hoping that I would, have a story similar to J.K. Rowling, submitted my book to 50 publishers, no one liked it, and then there was one that liked it. But that didn't actually happen. And about a week later, Penguin Random House actually contacted me and said, they actually liked the idea of the book, and would I consider, engaging with them further? And they asked a lot of questions, because usually when you follow this process, you submit your framework or your index, and then also in terms of one chapter. But fortunately, I had most of the book written. So I submitted a lot more, and lo and behold, last year, April, they said, we like we like the book. We just question the title. And well, I think it's worked out all well.
Absolutely. The Badass Trader, How to Trade Your Way to Riches. It's a wonderful thing. Now, where can people get a copy of your book, Robert?
The book will be available in about 2 weeks, initially on Amazon on Kindle.
So by the time this comes out, it will be on Amazon and Kindle, yes?
Yeah, it'll be on Amazon and Kindle, and then I presume hard copies would follow, on the back of that. So yeah, it's in about 2 weeks. I'm looking really forward to it. It's been a lot of work, as you know, as an author of a book or books. It takes a lot of work. I'm a bit scared to read the book because I'm sure, like any book, you might pick up gremlins, or you should have said it like this, or maybe meant that. But I do hope that the book achieves what I'm hoping for, is to inform people that trading can be pretty easy, but there's some hard things about it. And it's a combination between method, mind, and risk management, and you need to manage all three quite well to get this edge.
Method, mind, and risk management. Absolutely.
Yeah.
I love that. And that's a big theme in your principles of trading techniques on LinkedIn, which I very much enjoy. Now, Robert, just to finish off, do you have a try this at home tip that people can implement for their own trading?
I think the biggest thing that I've learned, mentoring people and engaging with a lot of clients, the biggest tip is you need to put a stop loss. If there's one thing you need to do, you might not get your entries right, you might not get your exits right, but put in a stop loss and adhere to the stop loss.
I think that is one of the biggest risk management techniques that you can possibly use. Robert, I want to thank you personally for everything that you've done for me to get me involved with IG and the Master Your Trading Mind Hub. Your influence has been so greatly appreciated. You're my lovely friend from South Africa. It has been such a pleasure having you on the Talking Trading podcast. Where can people get in touch with you?
So so predominant LinkedIn. So firstly, Louise, thank you very much. I've mentioned it a couple of times, you've been one of my trading heroes. So one of my badass trading heroes.
Whoop,
So
whoop.
thank you very much for that. So LinkedIn is probably the forum that I do most of my interaction with people. That's how we met as well. I do have my email address is robert@thebadasstrader.com. So I've registered that. I'm in the process of developing a website, but robert@thebadasstrader.com would be one point of call, or on LinkedIn.
Oh, magic. Look, Robert, what a pleasure. And if we can just remind every single person listening, look for the similarities rather than the differences. So some of the things that the Venn diagram of Robert and my trading involve, things like looking at the probability, assessing the risk, making sure that you have a clear mind when you're trading so that you don't fall into some of those cognitive biases, and making sure that you can actually craft your identity in the way that you can achieve and you can move towards that image of your future self. Now, for everybody listening on audio, just know that we have this as a video on youtube.com/trading game. And I would love a review or for you to recommend this podcast to a friend. Robert van Eyden from IG South Africa, thank you so much for your time.
Thank you very much, Louise. It was great being here.